It's Wednesday, July 20th, 2022. Many of you have asked to see Kona. She's growing, getting really, really big. Just absolutely gorgeous. Who can say that there is no God? Look how big she's getting. Just gorgeous. We love her to death. But we got a lot to talk about today, and I'm going to get right into it. Before I do, please make sure to give this video a like. Make sure you share it. Make sure if you haven't subscribed that you do subscribe and hit that bell notification down below so that you are alerted with the newest videos. They say that you'll own nothing and be happy. And I say this right now. Most people own nothing right now. They own nothing but debt, home debt, auto debt, credit card debt, student loan debt. That's all they own right now. Most people today, it's not going to be tomorrow you'll own nothing and be happy. Today, you own nothing. And many people are happy with that. They just believe that this is the way it is. Many people are unhappy. But I think most of us can agree that most of this country owns absolutely nothing today but debt. And how many people right now in this country own their car, not financing it, own their house, not having a mortgage, have their credit card debt paid off, have their student loan debt paid off? People have so much debt, yet today markets across the board all in the green, and we're going to be told now how great everything is, that they're going to get gas prices down, and look, everything is going to get better. But we have big problems coming, and as I said yesterday, this stock market and this economy are so detached. There is no connection now between the stock market and the US economy. Complete two opposite things. One is collapsing and one is being propped up. Let's get into some of the data today. It's very fascinating to me that with the news that we got regarding home sales, that the stock market could even be in the green today. And markets across the board in the green today. Yesterday, Dow Jones up over 750 points. And we get the news that Netflix lost nearly 1 million subscribers, and that's supposed to be good news. It's incredible. June home sales fall 5.4% from May as prices set yet another record. This on CNBC. Prices continue to rise. Now, there's going to be a winner and a loser here. And in my opinion, I believe the loser is going to be the seller. Because at some point, we're going to continue to see home sales fall and fall and fall until sellers begin to realize that the party's over. That these outrageous prices, it's over. And the sellers are at some point going to realize this. And otherwise, if they don't, we're not going to see very many home sales. But many people are going to be forced to sell. They're going to be forced to concede. And they're going to be forced to come to the realization of what the real market value is. Look, this is not a buyer's market by any means right now. By any stretch of the imagination. This is not a buyer's market. I believe this is still a seller's market, but it's becoming harder and harder to sell homes, especially at these outrageous listing prices. These days of 10, 20, 30 offers on one house, $50,000 or $100,000 over asking price. This is a rarity now. This is very rare, and it's going to become very extinct very soon. If you're looking to sell a house, I hope you put it on the market yesterday. If you're looking to buy a house, this is my humble opinion, not financial advice. Keep your powder dry, continue to stack cash, sit on the sidelines, and wait this out. This is a game of patience now. We are going to continue to see major cracking in the real estate market. We're going to see a collapse. Mortgage demand drops to a 22-year low as higher interest rates and inflation crush home buyers. This on CNBC also. Mortgage demand fell last week, hitting the lowest point since the year 2000. Buyers have lost considerable buying power as rates have almost doubled since earlier this year. 30-year fixed rate I checked this on Forbes about an hour ago. 30-year fixed rate, 5.93%. Mortgage demand fell 6% last week compared with the previous week. Applications for a mortgage to purchase a home fell 7% for the week and were 19% and was 19% lower than the same week in 2021. Nobody out there can tell me that prices are not going to come down. I'm sorry, Dave Ramsey, you were completely wrong. You are wrong. You will be proven wrong. This is the worst possible time to buy a house. If you can hold out, I would hold out, because we're going to see big sales and big opportunity coming in the housing market. Wolfstreet.com, San Francisco Bay Area, Southern California home sales crater. Prices begin to drop. California pending sales collapse 40% from a year ago. Now, I don't know about you, but things are not adding up. We're still being told how wonderful the housing market is doing. We're watching the stock market, Dow Jones up 750 plus points yesterday. No fear with what is happening in the auto market as far as delinquencies, massive delinquencies across this country piling up, billions of dollars. These banks are going to suffer billion-dollar losses with these horrific auto loans that they made. And we're going to see the same problem take place in the housing market. Remember, auto market 6 to 12 months ahead of the housing market. We're beginning to see major defaults in the auto market, and we're going to begin to see it in housing. When people don't have jobs, when people are being robbed by inflation, when their savings is wiped out, how in the world, somebody explain to me, how in the world are they going to hang on to their homes? How are they going to go out and buy a home? How does a first-time home buyer go out and buy a home in this type of environment? But, you know, when I read some of these reports that the housing market is stable, it's strong, the consumer's strong, the economy's strong, very low unemployment. We still have people telling us that the consumer has more money than they know what to do with. I don't know about you. Do you have more money than you know what to do with? But I bring this article up on Wolf Street, and it points to California. And remember, California is always one of the hottest housing markets when we're in a boom. Prices accelerate here first, and they crash here first. And when we begin to see big trouble in California, it is going to travel east throughout America. It's starting here, and it is a bellwether, a temperature gauge to what is coming to the rest of the country. Closed sales of single-family homes in California plunged, get this, they plunged 8.4% in June from May and 20.9% from a year ago. Declines in closed sales of single-family homes. And the article breaks it down in counties. So declines in closed sales of single-family homes, not condos, but single-family homes. Los Angeles saw a decline of 20.6%. That's Los Angeles County. Orange County saw a decline of 36.1%. Riverside County, a decline of 27.4%. San Diego County, a decline of 30.5%. And San Bernardino, a decline of 27.5% in closed sales of single-family homes. This is, to me, a huge bellwether to what a lot of this country is going to see. Areas that were, you know, just literally exploding in home sales, in new home construction. This is coming to you. Areas like Phoenix and Austin, parts of Florida. Some of the hottest housing markets in America are going to begin to see what we're seeing here in California. Listings with price cuts rose to 35.5% of total listings. This is the highest since 2019, with the median price cut being 5.3%. People write me throughout the day telling me that in their area, they're seeing prices coming way down. So I think some of the news that we're getting is a little bit late. I do believe that we right now, most parts of America now are beginning to see the median price of their housing market begin to come down. The magic is coming out of the housing market, ladies and gentlemen. So again, if you have some cash, keep your powder dry. I believe sales are coming. I want to make one more point. A lot of people that I've had conversations with will tell me that, oh, these rates, they're going up, but 5.93%, 5.5%, 6%, 6.5%, these are normal rates. And historically, yes, they are normal, but here is the problem. The prices, the overvaluation of real estate in America is not normal. Watching these 20 and 30% price increases yearly take place, this is not normal. It's very abnormal. So when you take a normal interest rate and put it on these abnormal prices, you've got big trouble. So yeah, 6% on a normal $300,000 house, okay, normal. But when that $300,000 house is now selling for $600,000 or $700,000 or $1 million, that's not normal. And 6% on $700,000 is a lot of money. So we're seeing very abnormal things. We've witnessed an abnormal economy, an abnormal stock market, an abnormal housing market. And in my opinion, it all has to collapse. And I really do believe in order to avoid a major depression in America, they're going to have to raise the Fed's fund rate drastically, put us into a major recession to avoid something much, much worse. Wolfstreet.com, housing bubble woes. Sales of homes below 500,000 plunge. Total sales drop to lowest since the pre-crisis levels, and supply jumps. So, in one corner, we're reading that we don't have supply. In another corner, we're reading that we do have supply. The excuse for the drop in sales is that there's a housing shortage, a shortage of homes. This is now vanishing because people are beginning to go on the MLS, multiple listings service, and they're seeing massive amounts of listings coming to market. I have a friend who's one of the biggest brokers in his area here in Southern California, and he says the MLS, the amount of listings on the MLS is exploding. His office listings exploding. Sales of single-family homes dropped by 12.8% year over year. This is nationally. Sales of condos and co-ops plunged by 24.7% year over year. This according to the National Association of Realtors. I mean, you just have to connect the dots here, and you have to ask yourself that things just aren't adding up. How in the world can we be in a recession right now? Or some people would say, well, we're going to be in recession. So if we're heading into recession, or as most of you know, we're already in a recession, either or, and we're looking at this housing data, we're looking at home builder sentiment plunging, we're looking at consumer sentiment in the gutter, we're looking at 75% of middle-class households saying that they are struggling. We're looking at a food crisis in America. We're looking at a federal debt that exceeds $30 trillion. We're running the biggest deficits in our history, $170 trillion of unfunded liabilities in America, Medicare, Medicaid. We have a massive amount of unfunded pensions in America. We have massive municipality debt in America. We have crime running rampant, out of control here in America. It goes on and on and on. How in the world can these markets be up other than the Fed in here propping it all up? Housing starts plunge in June to lowest level in 9 months. This was, I believe, on Fox Business. The housing boom, we have to realize this was artificially juiced by the Fed. And we also have to come to the understanding that the Fed bought $2.7 trillion in mortgage-backed securities. So we have a housing boom and we have a Fed at the same time buying nearly $3 trillion of mortgage-backed securities. I've come to the realization that this housing boom is not the result of a healthy, thriving economy or a healthy, thriving consumer or a healthy, thriving job market. It is and was the Fed that juiced the housing market just like it's juiced the stock market. And we all have to come to the realization that we are all going to pay a huge price for this. Reuters. Russia is China's top oil supplier for second month. Also, top performing currency in the world, Russian ruble. So I don't know about you, but we're sending all this money all over the world. And I'm not getting political here. I'm taking no side. I don't get political on this channel. But we're sending billions all over the world. We slap all these sanctions on China. And what's the result? They're making more money than ever, and their currency is outperforming literally any currency on planet Earth at this point. Think about that. Think about how messed up this whole thing is. Food pantries warn of hungriest summer. This on Fox Business. Food relief organizations warn of the hungriest summer in recent memory. They expect to see food demand remain high throughout the summer. Older Americans face a looming hunger cliff, according to the article. And it says that we're seeing a decrease in the charitable support and the phasing out of federal emergency funding. Where is the money, ladies and gentlemen? Where is the funding? Why do we have a hunger issue in America? We're told that we're the wealthiest country on planet Earth, even though, yes, I know we're the biggest debtor nation on planet Earth, and this will be the demise of America because we cannot stop spending, we cannot stop printing. But the sad thing is, if we're going to print all this money, couldn't we at least give some of this money to people right here that need it? We have a homeless crisis, humanitarian crisis right here in America. We have older Americans not getting enough food. We have vets that don't have places to live. And yet every day on TV, I see these commercials wanting donations to take care of the vets. Why, if we're going to print all this money, why are we not giving some of it to people who really need it? At least I could justify a little bit of the money printing if we were helping out people who need it. We have people, so many people on the streets with mental disorders that should be in some type of institution. But we're so broke, we don't have mental institutions in America anymore. It was phased out. It was too expensive. But we have the money to give to the world. Unbelievable, isn't it? I mean, think about what $1 billion would do to people who really needed food right here in America. And while I'm on the food topic, I want to say something. That out here, there are food banks out here in the desert. And there are people who are living off pensions, people who have jobs, and they go to these food banks and they literally steal the food at these food banks. They act like they're hungry, they act like they need the food, and they go and wait in line at these food banks. They have RVs, they have homes, they have nice cars, and they go to the food banks and take advantage of the food banks. Please, don't do that. That's really a sin. And I know of people, not personal friends, but people that I know of that I'm not personal friends with, but you know, I know of that do this. And it's really disgusting when you think about it. That somebody that doesn't really need the food is going there. You're basically taking the food off of a hungry person's plate. right off their plate, right off of a hungry family's dinner table. You're taking their food when you don't need to. And so, you know, again, we saw all these people, you know, stealing the PPP loans, doing the fraudulent unemployment benefits, and now they're at the food banks taking food that they don't even need. It's just really, really a sin. But I know of people in my area who have done that, and it's quite disgusting. It's quite a sin, and there is a place in hell for you. Last article I want to finish with on CNBC: 40% of U.S. workers are considering quitting their jobs soon. Question is, where are they going? And what does this mean for the housing market when 40% of U.S. workers are considering quitting their jobs? And when they quit their jobs, where do they go? They're going to go from one low-paying job to another low-paying job. We know that the majority of this market now is service sector jobs, leisure and hospitality. Some people may quit their job and never go back to work. I don't know how people are doing it. I really, really don't. When I go on the freeway and I see all these cars driving around, even though it is a little bit, there are less cars now, especially when we were in Orange County yesterday. If you did not see the video yesterday, Matt and I in Orange County at South Coast Plaza, it's a really, really good video. I was really stunned with what's happening to the luxury retail stores out there. So please check it out. But we did notice less cars on the freeway, even though it's still busy. It's still busy. But I would say 15–20% less cars on the freeway yesterday. So that's substantial. But still, people are paying around $6 a gallon here. It is pulled back a bit. But how long until we begin to see oil prices go back up and go back up at the pump? And if you don't have a job, if you're quitting your job, how in the world are these people driving around? How are they paying on their cars? How are they paying their rent, their mortgages? And the answer is, I guess they're not. They're using credit cards to put gas in the car. The repo man's looking for them. I mean, these delinquency rates across America are absolutely startling. Startling. I mean, double digits in so many states. Double digits where people are behind on their auto loans, not paying. Prime loans, the repossessions of prime loans has over doubled. So it's not just subprime. But you look at some of these states, 11, 12, 15, 24% of people with auto loans have missed 30 plus days. And once you miss 30 days, very, very hard to come back and actually get whole on that loan. Once you're 60, 90 days, it's done. You're never gonna get whole with that auto loan. So we're going to see big trouble. It's going to transition into housing, but most people in this job market are going to go from one low-paying job to another, and one service sector job to another. And what does this mean for the housing market? How do we support an auto industry, a housing market, when half this country doesn't have $500 saved up, when everybody's quitting their jobs, when everybody's dependent on a credit card? This is going to get extremely ugly. Look, I don't care what the stock market does tomorrow. I'll watch it because it's just another example of how they are just trying to fool the average person by saying, look, everything's okay. The stock market is up. The stock market could go up every day for the next year. It doesn't mean anything because this economy continues to collapse. And the people down there in the comments who still don't believe what is happening because they're watching the stock market, they go right back to the stock market. Oh, the stock market's up. You were wrong. The stock market's up. Well, let's not forget, the Dow Jones was near 37,000 points. We're, I think, right around 32. So the stock market has been rocked, even though the Fed has been manipulating it and buying bonds and buying stocks, corporate buybacks. We've had low rates, and they're still struggling to get this thing back up on its feet. But every time it goes up, people are like, look, you were wrong. It's coming back. It's coming back. I don't care if it goes to 50,000 points, the Dow Jones. It doesn't mean anything. Because, see, I go out and I walk around and I drive around and I talk to people and I see exactly what's going on. I see the crime statistics. I see the amount of for sale and for lease signs, which, by the way, as we were driving through Riverside and Corona and parts of Orange County yesterday, absolutely unbelievable. the amount of for sale and for lease signs on commercial buildings, office buildings, restaurants, retailers, you name it, just piling up. That is not a good sign. So the stock market is saying one thing, but the real economy is saying another. The consumer is saying another. The consumer is tapped out. So if you believe everything is okay because the stock market's going up, continue buying into the stock market. Do what you feel you need to do. I can see with my own two eyes and I can hear with my own two ears what is really happening. I've never seen this economy so distraught as I see it right now. And this to me just reinforces with me daily why I'm going to continue to prepare. I'm going to continue to add to my gold reserves, my cash reserves, my security reserves, my food and water reserves, my barterable reserves, etc. And this is why I will continue to have a very close knit of people with a skill set. This is going to get really ugly, ladies and gentlemen. They're trying to tell you everything is okay on the television because the market's going up. That's so manipulated. But you know, deep down, and a lot of these people who disagree with me and argue with me, they're scared. Because yeah, the stock market can go up, but they see that their friends are losing jobs. They see that their wages have been cut. Their savings is shrinking. The wealth inequality in America is at a record number now. CEOs making, what, 325 times what their employees make. You think there's no wealth inequality in America? It's getting harder and harder to survive, yet people believe that everything's going to be okay. I don't believe it's going to be okay, and that's why I'm going to continue to prepare. If I'm wrong, well, I've got a lot of cash, a lot of gold, a lot of food, and a lot of skills. If I'm right, then the people that don't have those things are going to be in big trouble. Have a great day. God bless you all. Please like, subscribe, and share this video, and I look forward to speaking with all of you very, very soon.